Landon, there's so many questions I have with this one. We know about the exposure to Nike. We know about the pent-up demand for things. We know about that extra discretionary spending money that many may have because they're not going out and spending money on the weekends as much as they maybe were in the past. How much of this has been kind of, maybe fool's gold for Foot Locker and it's showing a beat on last quarter and a comeback? Or how much of this has been really strong reinventing itself kind of business strategy on Foot Locker's part, shifting towards e-commerce, even though it was a little bit late to the game, that's actually showing signs of life?
Yeah, well, I think it's a little bit of both, but I think overall it's going to lean more towards the fool's gold side of things. They had a tremendous cut in revenue a couple quarters ago because everything's in the mall, and of course they have to move to digital. They know that. They're doing a good job of making that move, but they're just so susceptible to Nike. It's unbelievable. Nike supplies 70% of their footwear. And so, just with an announcement, Nike could crush this stock. And we know it's coming eventually in the future. Once Foot Locker loses its profitability for Nike and people just start using Nike.com, then it's bad news for Foot Locker. But they had a really bad quarter a couple quarters ago, all because of the pandemic and the lockdown. And then there was a huge surge in demand. It was pent-up demand. You can see that big bar on last quarter's chart. And so, if we're comparing to that, there's a huge drop-off. We can actually see when you talk about digital, you talk about the online presence of Foot Locker. We actually see that while the digital element of people talking about it on social media is up about 50% year over year, it's down about 60% quarter over quarter. And so I think last quarter was a bit of an anomaly. I think that, people unable to go to malls and buy shoes had that pent up demand. They got them from the websites. Some malls are still open depending on what state you live in. But right now, I think that you can't really compare to the huge surge last quarter. I think that's, like you said, a little bit of fool's gold. And everybody knows that Nike's just the looming. It's just an axe waiting to drop. They've already pulled out of the smaller stores, Dillard's and Zappos. They're really focusing on going direct to consumer. And why wouldn't they? It's more profit. They don't have to cut in the wholesale or cut in the distribution partner there. And so they're going to make that move eventually. And Foot Locker's doing everything it can to insulate themselves from that. But they're just so exposed. And so long term, I don't like this company. I think that they've got a lot of things to figure out. And right now, I think that if you compare to last quarter, there's a good chance investors are going to be disappointed.
Yeah, Landon, I mean, all I can tell you is I see your data and I look at that big candle in a couple quarters ago and like, wow, that is incredible. But we're not trading it based on that, are we? We're trading it based on right now. And all I can tell you is I went on Nike.com a few months ago where they were offering 25% discounts on running shoes, right? Think about that. $100 pair of running shoes now cost $75. And it dawned on me, the average markup when you sell, Nike sells to Foot Locker, Foot Locker sells to the public is probably 100%. So Nike selling a shoe directly to you for a 25% discount is a windfall for Nike in terms of profits. So why wouldn't they embrace this? And you're right, Landon. This could be a short-term good story, but long-term, you got to think there's very little future for Foot Locker in this business unless they don't find a new way to reinvent themselves, Landon.
Yeah, I agree. And like we talked about, everybody knows it. But yeah, those margins, it's once you just cut out the middleman, it's unbelievable. It's a win for the consumer. It's a win for Nike, and it's a massive loss for Foot Locker. So they've got to figure that out. Incidentally, there's a lot of things also working sort of against Foot Locker right now. Obviously, you've got reduced foot traffic. The back to school shopping is definitely decreased because kids always want to look great going back to school. But if you're not going, then you don't care what you look like on your Zoom call. And of course, a lot of local sports activities have been cut, and so you don't need the sports supplies. That in combination with the fact that Nike's a couple months away from earnings, but we are showing quite a bit of a slowdown. They had a very similar effect where there was pent-up demand. The documentary about Jordan did really well. Last Dance did really well promoting their brand and getting people interested in shoes. And we're coming down from that now. So purchase intent for Nike is actually on the decline. So everything that we've got really kind of points down for Foot Locker. We're not extremely bearish because I think a lot of this news is baked in. Everybody knows about the Nike and direct-to-consumer effect on Foot Locker. It's just a question of how much do they believe in that pent-up demand, the boost of sales from last quarter. And if you're going by our data, we think it's, like Alex said, a little bit of fool's gold.
So, Landon, as we wrap things up here, obviously the short-term story is different than the long-term. Let's focus on that longer-term story for a bit, because I'm trying to analyze the trends and things that Foot Locker can maybe say, here's the benefits we offer as opposed to going to Nike.com. And the only really two that jumped off the page to me would be, you want it right now. So you go to the store and you buy the shoes and you have them the same day. But we know shipping trends are definitely not working in the favor of Foot Locker, if that's going to be the thing that they're going to bring to the forefront. Faster shipping, more efficient shipping has never been more accessible for these companies than right now. And the other thing would be, maybe I don't know what I want. Maybe I just want to go look at all the brands. If I go to Nike.com, I'm only going to see Nike brands. But this is anecdotal, but I mean, the targeted marketing that these companies are doing now through social media, through influencers and all that thing, I feel like the consumer has a much greater idea of what they want, brand loyalty, than maybe ever before, because of how effective some of this marketing has been in kind of the status around particular items. That is there that much treasure hunting even going on anymore?
Right. I think that's a great point. If we were talking about jeans or clothing, it would be a different, you'd have another element in there. You'd talk about trying it on, but generally speaking, people know their shoe size and it doesn't change. And so that's even taken out of the mix. But yeah, you do want to maybe go to the store and see what you want. But a lot of the hype for these shoes is online, and it's moving in that direction. And so I think that's where people are going to make the purchase. And so really strategically, they've got to have a killer website that just is way better than Nike's, and a fantastic in-store experience, and they've got to get those stores opened up. Obviously, that's not up to them, but they need them to be open so that they can have some advantage. But all of that advantage is dwindling, and it's just a matter of time. They've got to come up with a new angle. I don't know what the answer is. I hope the executives over at Foot Locker do, because everything is pointing down for Foot Locker.